Navy Federal extended used car financing terms to 84 months. An 84-month used car loan may lower car payments, but it's going to stretch the financial risk for buyers. But the real question is, welcome to Credit News, where we do a new show every single week. Today is episode 1. Let's get right into today's information. So first things first, guys, that you need to know. Number one is that Navy Federal is making a major change to the auto industry that a lot of people are going to start to see with other credit unions and banks. And here's what's happening. So now Navy Federal extends used car loans to 84 months. All right. So now, typically people are used to seeing 5 years, which is 60 months, or 72 months, which is 6 years. But now this is going into 7 years. All right. And not only that, Navy Federal is kicking this off, but a lot of banks are now starting to offer, into that range of 84 months, 96 months. We're starting to see that increase. So Navy Federal extended used car financing terms to 84 months for eligible buyers right now. The credit union lowered the auto loan interest rates as ownership costs keep rising fast. Essentially, people are getting to the point where if they do keep a 4-year, 5-year, 6-year term, the payments are becoming astronomical. So they noticed that car ownership, the index rose 7.2% in May, showing that buyers are feeling the higher costs. Okay. So now what else does that mean? Used car buyers may get smaller monthly payments. This is going to mean that the 84-month used car loan spreads payments across 7 years instead of 6. That can lower your monthly payments when vehicle prices and borrowing costs are high right now. However, you guys got to think about this as well too. If you keep a loan longer, that means that the borrowers are going to keep paying on a used vehicle for much more time. Now, this is just an option. You can still go for 6 years, 5 years, or 4 years, but you're going to start to see more banks and credit unions start to do this more often. Navy Federal also lowered the auto loan interest rates. This is huge because typically you end up getting a higher rate when you have a longer term. But to be competitive still at that 84-month range is very difficult to do. So Navy Federal also lowered the auto loan rates during the same week. And the change appears aimed to be easing monthly payment pressure for used car buyers right now. Lower rates, of course, is going to obviously help you on the lower car payment side of things, but the total cost is still going to depend on the term that you get. So you don't have to go that 7 years if you don't want to, but obviously the size of the loan. So if you're going into that 50,000, that 70,000, $100,000 car range, this is you may want to consider. And then of course the overall pricing, which is the out the door. So you have the car, you have the taxes. If you add on any, maintenance or any warranties, gap, all of that is going to play a role into the final amount that you end up financing. So let me know your thoughts about that as you all are going through the car buying process right now. Have you all ever thought about going more than 6 years? Do you feel like that having a car loan that long is too long? Let me know inside the comments section below. Now, here's another thing that you have to keep in mind as well is that the auto industry is stretching affordability. So this is just Navy Federal making some changes in-house. They saw that they were losing some car deals that people were not financing with them because they were not able to stretch the loans out longer. I know people are saying to themselves, well, why would you want to do something like that? There are some people who they have a certain payment budget. So they don't want to go 7 years. But in order for them to get to that $500 a month range, that's a huge difference, because you may end up paying $700 a month or more. All right. So the auto finance news says that lenders are lengthening terms to meet payment needs from buyers. Now, longer financing may improve the budget, but could increase the total interest paid over time. Now, how do we combat that? There's a few ways we can do this. You still can refinance your auto loan. Okay. You guys can refinance at any time. The sweet spot is after 24 months or so, especially if you have double-digit interest rates. So keep that in mind. This is just a minimum payment. We don't talk about this enough. When people hear the word minimum payment, they think that minimum payments is only when you are talking about a credit card. That is not the case. Okay. So you can most definitely be in a situation where you say to yourself, okay, I have an extra $20, I have an extra $100. Put that towards your auto loan so it goes towards your principal so you can actually pay off your car faster. You can do the same thing with mortgages, personal loans. Some personal loans have prepayment penalties, which means that if you pay in advance, so keep that in mind as well. But let me know your thoughts on this. But this move, it shows that affordability pressure is forcing the auto lenders to adjust loans again, just like they did, years ago when, 6 year loans were not a common thing. 5 year loans were not a common thing. 4 year loans were not a common thing. Okay. You got to go back in time. But as the prices of cars continue to increase, you can keep whatever term you want, but can you afford that monthly payment? All right. So again, you have to see what else is out there for you. Now, we also have some major news that's coming out. So stick with me, and I'm going to show you guys something that's changing in the insurance industry as well. But the big warning for borrowers: an 84-month used car loan may lower car payments, but it's going to stretch the financial risk for buyers. Borrowers should compare the monthly payments with the full upfront costs. Okay. So make sure you understand what it's going to be if you keep that same loan term if you're paying every single month. But the real question is whether the car stays affordable across 7 years of payments. All right. That's today's credit news. And again, we're going to bring you a new show every single week. Let me know your thoughts on this. Appreciate you guys being here, guys.